Welcome to East Capital Group's podcast. I'm Peter Elam Håkansson, CIO at the East Capital Group. And we are talking to Sanat, our colleague who is in Delhi, visiting companies on the ground and following up our investments in India. Sanat, very happy to speak to you. Can you please just tell everyone where you are at the moment?
So right now I'm in Delhi. That's the capital of the country, India. So I came here for a conference. So where I spent 3 days. One day was meeting the companies on the ground, so visiting all the stores where the real business is happening. And then 2 days I spend speaking to all the companies executives, understanding their business model, growth factors, and where they see the companies going forward.
Yeah. And India at the moment is clearly the sort of shining star on the growth scale on a global basis. It is, according to the IMF, is forecasted to grow 6.1% this year and 6.8% next year. How does it really feel on the ground being part of that kind of fast-growing environment?
Yeah, no, I think that's a very good question, because when we read about these numbers, they sound very exciting, but when you go on the ground, you feel the real change. So, for example, I was traveling to this one city called Lucknow from Delhi. It's a 500-kilometer distance, and I was going by air, and the airport was completely packed. There are 11 flights from Delhi to Lucknow every day, and my flight was fully booked. When I reached the airport, it took me almost 15 minutes to enter the airport. So again, it was completely packed, and in a very positive way. So it was very well managed, but the demand for domestic travel, I think this consumption-driven story has been very, very impactful in India. The middle class and upper middle class has seen splurge in their income during this COVID period and the technology things, which when things were moving there, and these people want to consume. So you see this kind of impact when you go to a jewelry store, consumer discretionary, traveling, domestic travel, business for pleasure, and all these things are really making a big impact in the overall economy.
Mm. No, it's clear to see, and we see it also in the numbers of the companies we hold in our funds. Maybe would you like to give an example of any of the holdings you like the best at the moment in our GEMS strategy?
Yeah, sure. So we own a bank called Karur Vysya Bank in India. It's a bank which is focused on tier 2 cities and rural population. And I spent some time with the management. And rural income was little bit on the back door for last couple of years, given we had the COVID and then we have the higher inflation. But now we see there's a big pickup in rural income. And that's, I think, impact is helping this bank grow their loan book very fast, because when this income grows, so there's a big harvest, these are small time farmers having a small piece of land. They like to borrow money for working capital to buy seeds, to buy fertilizers, and this is the kind of demand which has been picking up very fast. And this bank is very well positioned to benefit from this kind of demand from these farmers, single land piece farmers. Also, they are very good for the ESG perspective also, because they don't charge 20-30% to these farmers. They charge 9 to 10%, where the benchmark policy rate is around 6.5%, because they use gold as a collateral. So I think that's one story which is very well positioned. So we started investing in the bank last year. The bank's earning went up by almost 100% last year, and I think this year we expect a similar thing to happen again.
That sounds great. One thing which has come up over the last few weeks on India is this Adani discussions and what is really happening in his group of companies. Could you very shortly just give an impression from the ground what people say and think about the whole situation?
Sure. I think this is the most talked about discussion in India, outside India, by every sort of investors. So I was having a chat with a lot of corporate banks, and everyone has an exposure of around 0.5 to 1% of their loan book to Adani Group. So let's say this is not at all systematic in any way. Most of the loans which Adani Group has was mostly through bonds. So these are different kind of investors. So banks are not at all exposed. And when I was speaking to a lot of investors, the fund managers, the brokers, even most of the fund managers don't have any exposure to the growth in terms of equity allocation. It was mostly a retail and high net worth individual who are investing in these companies. So even if things will go south from here, which they will, because yesterday there was a MSCI announcement that they will downgrade these companies, so there'll be some passive outflows, but nowhere this is systematic in nature. This is not going to derail any story. This is more of a discussion which everyone likes to have with the banks, get some understanding. But after that, this discussion gets out in first 5 minutes of every meeting. So nobody is bothered from government side, from bank side, from the investor community.
Sounds good. Thank you, Sanat, and good luck with the rest of your trip.
Thank you very much. Thanks a lot.